Milken Institute Asia Summit here in the Lion City. This is Insight with Haslinda Amin. We have a great lineup of guests joining us today. The CIO of Malaysia's Sovereign Wealth Fund will update us on the country's push to become a global innovation hub, inviting both the US and Chinese tech giants to take part. We'll also get insights from Indonesia's Vice Minister for Trade and Canada's former Trade Minister on how President Trump's tariff policies are reshaping global commerce. And here are some of the other big stories. The AI rally rolls on in Asia, with Japan taking the lead today as tech-related stocks propel global equities to a record high. Hitachi is the latest to get a boost from a deal with OpenAI. Plus, family offices are now in the sights of India's markets regulator as the nation's billionaires become a growing force on exchanges. We have more on that Bloomberg Scoop. Straight to our top story. The tech momentum is showing no signs of fading as the global AI frenzy propels equities to fresh highs. Stocks in Asia are poised for their fourth gain in 5 weeks, with tech firms in Japan leading the way. Gauges tracking chip stocks in Asia and the US added over $200 billion of market cap on Thursday alone after Samsung and SK Hynix reached initial agreements to supply chips to OpenAI. For more on the Asian AI rally this week, let's bring in Bloomberg and Live strategist Mark Cranfield. Mark, there's no stopping the rally. It seems the outperformance continues.
Yeah, it just seems to go from one country to another. So as you were saying, it's Japan's turn today. We're seeing things a little bit cooler in the Hong Kong side, but with the Korea closed, the focus is very much there in Japan. And then we've had a couple of deals announced overnight where Widya and OpenAI are teaming up with more Japanese partners. And also Bloomberg Intelligence have got a very good report out this morning talking about SoftBank, which has been a concern for some investors in the past, that their massive portfolio hasn't always delivered as well as expected, and yet this year it's really made a tremendous rebound. Of course, their exposure to OpenAI and other related companies such as Alibaba as well is really helping them. So Japan is very much in focus today. Things are looking a lot stronger there. And they're coming into this LDP leadership vote at the weekend, and nobody's really expecting a huge surprise there. At the moment, they think that Koizumi and Takeichi are likely to be the two candidates. May need a runoff, but neither one of them is really going to be something investors need to be too concerned about. They pretty much know what to expect there, and sensibly, both of them have kept away from monetary policy as well. And when you've got the yen relatively weak as well, the Bank of Japan may increase interest rates, but it's only going to be by a small amount, and globally 0.75% would be pretty small compared to its G10 peers. So Japan's in a good spot. They're getting all the attention today, and it looks as though the rally, which is one of the best in Asia, still has some way to go.
The thing is that people like Howard Marks are saying, beware, that could be a bubble. But when you take a look at the costs of hedging across all asset classes, they're tumbling, and that's providing the momentum that we're seeing right now, right?
Yeah, not just Howard Marks. At the very conference where you are today, we've had the chief investment officer from GIC saying that he sees the risk of a hype bubble in AI, particularly in startup companies, people throwing money at any new company which just wants to get involved in AI, and they may not even have a great game plan on how to do that. So that's definitely the risks with a building. But then you see the infrastructure companies in that space, the big people like the likes of Nvidia and Oracle, and they're still producing tremendous profits. We've got the US earnings seasons coming up very soon, and people will be looking at that for confirmation that the numbers are still very, very positive. If you talk to people in the markets, they think that the earnings risk will probably only show up in the first half of next year. This current season is probably going to be a decent one. So the euphoria will probably last for a bit longer, but certainly people can't afford to be totally complacent. By the time we get into 2026, it could be when things have just gone too far and people need to take a pullback. But for now, people can only see the blue skies with AI.
But that's the thing, right? I mean, the last time we talked about a bubble, it went on for another 3 years before that bubble burst. Mark, thank you so much for that. Bloomberg MLI strategist Mark Cranfield there. Now let's get to Malaysia. It's been moving aggressively to capitalize on the AI boom, and its $35 billion sovereign wealth fund, Khazanah, has been leading the charge. It's been proactively matchmaking global tech giants with local entrepreneurs, with Microsoft, Alphabet, Tencent, and Huawei already investing in Malaysian data centers. But as tech tensions between the US and China intensify, Malaysia has sometimes found itself caught in the crosshair. Joining us now is CIO of Khazanah Nasional, Hisham Hamdan. Good to have you with us, Hisham. I mean,
Thank you.
We talk about whether or not there's a bubble in the AI space. Obviously, there is momentum and you have to ride it. Is that how you see it?
Well, it's been fantastic for us. If you look at where our exposure is globally, in the US, we've done really well with Max 7. I mean, you can see S&P 500, up 15% or whatever it is. If you look at our position in China, because of DeepSeek and AI, the H shares, MSCI China has gone 30+%. If you move domestically, and we're seeing all the hyperscaler data centers setting up operation in Malaysia, so the need for energy, so Tenaga Nasional, and also the company called Lestra, where we're putting a lot of money in order to participate in this clean energy. So we are well diversified, really benefiting from that. On for the country, and you can look at semiconductor, we're trying to put a lot of money into that, and part of the government under the Gear Up program, where GLIC putting a lot of money in some of the sectors that used to be owned by MNCs. And one of the problems with some of this semiconductor industry, because they're owned by MNCs, the profit are captured in S&P 500 and in NASDAQ. So very small portion of that profit are captured in KLCI. So that's something in the issue that where the GLIC need to come in and invest a lot more into this. And so far, we've been very, very happy with our position.
There are key themes right here, AI among them.
Yeah.
Is that prompting you to perhaps rethink your portfolio? Are you making any changes to better capitalize on the themes that are emerging right now?
Yeah. If you look at AI, if you go back to .com, the market did really well until briefly. But to me, AI is very much horizontal. I'm very excited about it because it affects all productivity of the companies, right? And that's something that is like internet, it's like electricity. It can help a lot of company productivity, and whether we allocating or not, part of our portfolio, the bulk of it is emerging market. So anything that AI can help productivity of our companies, because some of our companies to Malaysia, 50-60%, and those are the things that I'm really looking forward for them to improve the productivity of the company. And by just applying AI, by importing technology from US and China, that we hope to put more money into Malaysia, and that's where we hope the company will improve. Yeah.
As it stands now, when you take a look at your portfolio, 60% still domestic, 40% international.
Yes.
Given the potential in the US, in China, when you talk about AI plays, is there reason to think that perhaps you should be allocating more of your portfolio to international? Perhaps 50-50?
I mean, we're very happy with our position, as I said. We've done really well in our position, right?
But you can do better, perhaps.
We can do better, but life is we have to fulfill our mandates. Our mandate is the company that we have in Malaysia, we have to fix them. And I've been saying around that this company, we need to do a lot more better activism rather than worrying about alpha. And we can allocate to private market, and that's why we're partnering our US private team, China private team, and even in Malaysia in order to get our exposure. But we are very happy with the broad exposure. And one thing about us is we think about 5 to 10 years, right? So we're not something that we want to go for alpha. We are beta shaper. So as long we are, exposed in diverse, global, including Malaysia, in terms of portfolio, I think we're happy with that. Yeah.
You talk about being a beta shaper. That means getting the companies within the country in better shape to give you better returns.
Yeah.
What are some of the key steps you're doing, and how soon do you think you'll reap the benefits of that?
Well, first we need to look at various numbers. Emerging market, 50% of GDP. Developed market, 50% of GDP. But in terms of percentage in MSCI ACWI, it's only 10%. So by itself, that's already a disadvantage. As a result, the amount of money allocated to this part of the world is maybe 7-8%. ASEAN, for example, the allocation is only 1%. That's equivalent to TSMC. One TSMC equal to entire ASEAN exposure. So not just in Malaysia. We're talking about the other sovereign wealth fund in this region, whether Temasek, whether Danantara, who own a lot of these national champions. And this part of the world, most of the company owned by SOE and also entrepreneurs. And unfortunately, they may not be as fast and may not be agile. So therefore, we need to fund some of the private equity, we need to fund some of the VCs, because private equity can be, I call it, skillful parent. They can provide discipline to some of the companies, provided those assets available. And the VC, for example, they're like innovation parents, right? They can combine with some of the technology in China and the US and help to some of the companies here, and they are insurgents, and so that they can challenge the incumbents, which right now, unfortunately, still old economies, right? So those are things that I don't think we can expect a quick results. But look at Japan. When they launched that maybe 10 years ago, and you see the benefit right now. With the shorter activities there, with private equity there, if you speak any of these private equity, they will say, Japan been fantastic. But that
so you're looking for more activist investors in Malaysia?
Activist investors, private equity, and VC as well.
We've talked about how Khazanah is playing a huge role in developing Malaysia as an innovation hub. You've played the part of a matchmaker in a way. What other companies, whether it's from the US or China, that you would like to see that you're actively engaging with so that you see their presence in Malaysia?
So one of the mandates is Dana Impact, where we investing in some of the small companies, whether tech, and then Jelawan Capital, we have fund of fund, we give money to VCs. So what I would like is, if you look at in terms of where innovation and the know-how or the skill set, I call it alphabets. If you play Scrabble, the more complex word that you form, the higher the point. So if you get X, you get Q. If you get Y, those are going to give you higher point. So China spent a lot of money R&D, 2.7% of their GDP. That's roughly about $500 billion US. And that's equivalent to the GDP of Malaysia and maybe Singapore or Philippines. So those are the VCs, the PE, that can bring some of the ready-made know-how, ready-made technology. You can see the EVs company in China or batteries company in China. Right? Those I think can be important. So for countries to become rich, the complexity advantage must be there. And those are the things that, to me, is work with the Silicon Valley, where we have an office in New York. We can connect you there. Work with, Shanghai office that we have there. And China have massive amount of technology, and that's something that ASEAN and Malaysia and our VC and PE can work together in order to improve some of the productivity of our old company and also the young companies. Yeah.
Speaking of China, of course, it's known for rare earths, and that's been a report suggesting Khazanah is pretty much in talks with a state-owned company to look at a joint rare earths project. Can you give confirmation on whether that is happening, whether you're in talks or what the projections are?
No, Khazanah, part of our job is to do a lot of research in different sectors. The one that we are in, the one we're not in, right? So these are something that we happy to work with Malaysian government in terms of looking at whatever new sectors that they may want to bring in. So it's still a government, we're doing research.
Are you in talks?
No, we're not.
Not currently, but it is an area that you're interested in.
That's an area that we do research all the time, not just rare earths, but battery or EV and those kind of things. So it's just one of the many sectors that we're doing study.
So just to confirm that the report that we've read so far is inaccurate?
We're not in talk with anyone.
What's your thoughts on the Chinese market? People talk about how, there's so much potential in terms of returns, valuations are still low. Your take on it?
My take on this is, if you look at just not the China, but Asia, the valuation is still very cheap. 14, 15 times. China has gone up by 30+%. No doubt from 2021 it's been difficult. But you look at the US, they enjoy this 22, 23 PE. So emerging markets still trading at 30, 35% discount. And look at the economy. The economy about 40, 50% of GDP. but look at the allocation, only less than 10%. So those are the things that all you have to do is allocate a bit more, and there'll be a flow of money coming to emerging markets. So I'm quite very, very bullish in China. And if you look at what Japan gone through 40 plus years ago, we had to relocate the supply chain, and Fed potentially going to bring down interest rate. In the roaring 90s, that are two major factors that boost ASEAN and this part of the world. I'm looking at the same sort of thing, right? Every time US has a problem, Fed had to act, and they had to bring down interest rate. That's where emerging market tend to do well. If you look at the last 4 or 5 pattern of bull run in the market, because of US had a problem. So I'm quite bullish about.
So bullish emerging markets, including China, in terms of allocation, are looking to do more. Can you quantify that for us? I mean, what's the allocation like for EMs right now, and what are you looking at eventually?
I've been asking my team time to go back and hunt, and what are private asset, what are public equities. In the past, we've been slowed down a bit, and we spend a lot of time into bringing some of the companies to Malaysia. But I'm looking to probably allocate a bit more. But
what's a bit more? Give us a number.
Well, I mean, when we do SAA, there's always a range of plus minus 5%, right? So that's something that in China we used to be double digit. So we're looking at maybe something that we can allocate a bit more.
We've had this conversation about whether there's too much euphoria, where there is a bubble, imminent, and the likes of Howard Marks have said, beware, because we didn't see the bubble bursting when it came to, the .com as well as the housing bubble as well. And when you take a look at what's happening in terms of the credit space, right? People say, perhaps there is a bubble there. Are these some of the signs that people are not paying attention to?
Well, .com is a sector, and then a vertical sector. AI is, I said, is horizontal, right? It's affecting, it's like internet, it's like electricity, which affect all sectors. To me, in the early days, if you look at in terms of value creating, capture and value capture, consumers, we don't pay very much, for the kind of service I get for AI. The Mac 7 is early capture. And now we have to look at the pick and shovel. Who will benefit from that? So those kind of things that I think there's still legs to go in terms of AI, and I'm actually quite positive. Bubble or not, that's something that we just maintain our diversification, where we have exposure around the world. So either way, will be affected, but we also will enjoy the ride.
10-year premier at the highest level in about 10 years.
Mm-hmm.
That's a sign that investors should be looking at, no? Yet when you take a look at the cost of hedging across sectors is at the lowest, it keeps tumbling. So, there seems to be some sort of dislocation, a mismatch. How do you make sense of that?
Haslinda, I've been in the industry long enough. I've always said this, time in the markets is better than timing the market. So, because we are global allocators, and so our job to spend most of the time allocate capital where 80-90% of the value. So I'm pretty calm about the whole thing.
You are very calm, but the thing is, we are at a very unusual spot.
True.
Where it is a rally of everything, including gold, bonds, stocks.
I agree. The risk, there's also a risk. The risk is inflation. And Fed, if doesn't lower interest rate based on the market expectation, there's a risk. The risk for this part of the world is failing to capture some of this supply chain to benefit the country. To me, that's a bigger risk than the current asset price right now, because it's a great opportunity for countries around this part of the world to benefit from this current movement of capital and technology industry. So that's to me as a bigger risk for me.
So for now, ride the momentum, Hisham.
Yeah, ride the momentum. Don't make the type 2 error, and enjoy the ride.
For now, Hisham Hamdan, CIO of Khazanah Nasional. Thank you so much for your time today. Now, still ahead on Insight, more conversations here at Milken as we discuss fresh trade risks with former Canadian Trade Minister Mary Ang. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Chinese equities currently have been on a tear recently thanks to an AI-led rally. Earlier, I moderated a panel on the global investment outlook here at Milken. Here's what some of the speakers had to say about the world's second largest economy.
China is one of the largest economies in the world. It's important. We have a team there. It's been a little harder recently, as everyone knows, because the rules of engagement haven't been clear. I think there are some signs that may be ameliorating. We've been busiest in Southeast Asia, in India, where we've had 15 IPOs in the last 3 years, in Australia, New Zealand, and increasingly Korea and Japan. So China, we've maintained a presence there. I think over any longer period of time, it's going to be an important economy. It's going to be an important place to invest. But there are still some growing pains, and I think the clarity that you need to really lean in, I think, is still developing.
But what are the potential opportunities in China? What's looking good? Potential opportunities? Opportunities.
Well, I think, again, we're less about some of the themes that Brian was mentioning, I think we tend to think about our themes on a global basis. So on a global basis, we spend a lot of time in technology. We spend a lot of time in healthcare. We spend a lot of time in areas that we think of as driven by secular growth and where you really can benefit by having a global practice and a lot of resources and understanding the nuances. So historically, we've had investments in those areas in China, as we have more broadly in Asia and across the globe. But again, I think there's probably experts on the stage who can give you a sharper answer on the current market, because I think it has been harder for Western investors as of late.
Yeah, we haven't done anything in China. We're studying Japan. I think there's a lot of opportunity in Japan right now. I think valuations. Yeah, I think valuations are on the equity markets are very cheap. I think there's the government has a focus on driving shareholder value creation. There's a new 401k-like platform that they've instituted, and so they're incentivizing saving and investment in the economy in a way that the government hasn't done historically. Which I think will provide for a solid backdrop for opportunities in Japan. And I think there's, culturally, for a brash American firm to come in and do LBOs and take companies private and use the banking system there that's extremely attractive right now, and even subordinate financing is attractive. Is not the right approach, and so we're trying to figure out how to partner and how to develop relationships with appropriate institutions where we can deploy capital and have an edge and make a difference. But in China, I just when you're defeated, right, and you don't have an edge, and when you don't have an edge, it's not where we're going to be spending our time.
That was a panel I moderated earlier here at the Milken Institute Asia Summit. Plenty more ahead here on Insight. Coming up, we hear why Indonesia is optimistic about the ongoing tariff negotiations with the U.S. A conversation with their Vice Minister of Trade is coming up next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the very noisy Milken Institute Asia Summit here in Singapore. Now, Indonesia's Vice Minister of Trade is optimistic about tariff negotiations with the U.S. as Jakarta seeks exemptions for key exports like palm oil, coffee and rubber. Speaking to us here at Milken, Dyah, Roro, Esti, Widya, Putri also explained Indonesia's efforts to boost trade relations with countries beyond the U.S.
We are very excited with some of the trade agreements that we have set in stone. And recently we just signed a comprehensive economic partnership agreement with Canada. And that was just literally a few days ago. And we also signed one with Peru just last month. We substantially concluded one with the EU, which is a really important trading partner for us. 9 years of negotiation and finally kind of finalizing this. And so this is sending a great signal, I think, for the business players in Indonesia, understanding that there are many markets around the world, and we're constantly engaging with the rest of the world through these trade agreements in a way, so then this would ease the path for the business players to then send their products abroad, wherever they want to go. We have agreements with more unconventional kind of trading partners. We're exploring Africa and Mozambique and Tunisia. Sri Lanka is also one that we're quite concerned about, like we want to expand going forward. So there's room for engagement, and Indonesia is always positioning itself to engage with the rest of the world.
Can these trade agreements compensate for the slowdown in trade with the U.S.? I mean, you have a target of 7% export growth for the year. Yeah. Are you on track? Will you be on track?
Yeah, so with the case of the U.S., I think one thing that I'd like to touch on is the fact that we managed to bring down our tariffs from 32%. We know that was kind of where it was at in the beginning. And then we had more kind of negotiations that took place, and now it's on the 19%. And so this sends a positive signal again to our business players who have been doing business to the American region. And through this, we hope that there will be even better engagement going forward. Again, this sends a positive signal, particularly for industries of, our specialties are footwear, rubber, apparel, but also sending that message to the private players that there are other markets available for these products across the world. So we're optimistic that we're able to navigate our way around the current geopolitical situation. And irrespective of the situation, we've always had that goal of, again, engaging with the world. And so these trade agreements have gone on for years, even way before the tariffs were
so
set into place forward as well.
There's still trade negotiations between the U.S. and Indonesia. Of course, you talked about 19% tariffs.
Yeah.
Indonesia is looking at exemptions for key exports like palm oil and coffee and rubber. How optimistic are you? You will get those exemptions. Where are negotiations right now?
Yeah, so I mean, it's always good to be optimistic, right? It's hard. I mean, everything that is happening is hard in itself, not only for Indonesia, for countries across the world. And so I think the outlook that we're trying to do and to have is to have that optimistic outlook, to see that, look, America, the U.S. has been a great trading partner for Indonesia. They are the second export country, and also, if I'm not mistaken, the fourth import country for Indonesia. Their positioning for us is very important, and we want to continuously maintain those good relations.
Southeast Asian economies, especially emerging economies in Southeast Asia, are currently really concerned about China dumping cheap goods into the respective markets. Where is Indonesia on that?
Okay, so with the case of China, again, China is our largest trading partner. It's our first exporting country. It's our first importing country, right? So we're always engaging with China. We see this as being a great trading partner. In terms of the goods coming into Indonesia, as you say, we have a mechanism also in place. So in the Ministry of Trade, we have the anti-dumping committee, and China is open for discussion with respect to this. And again, this also entails the types of conversations and the cooperation that we want to continuously build with China. I was at the AEM, the ASEAN Economic Ministers meeting just a few days ago. Very hectic, but very productive. We also, on the sidelines, spoke to China, and we wanted to see how we can better kind of improve our bilateral relations and trade going forward. And again, about these concerns were also addressed.
So the numbers are not showing just yet, as in the impact on industries like textiles. Has there been, any implications on, I guess, small and medium enterprises in the country?
So one of the things that we'd love to see is that industries in Indonesia continuously thriving, irrespective of everything that is happening. We have anti-dumping measures that are currently in place in Indonesia. Indonesia. So that is there, right, by the governments, and the government is there to kind of support the local businesses. But also industries have their own role, share of roles to contribute to the Indonesian economy.
All eyes are on the ASEAN meeting coming up. We have the USTR,
meeting,
yes, coming up in Kuala Lumpur in October. The USTR has said that President Trump is looking to sign some deals with Southeast Asian nations at that time. What does Indonesia hope to achieve from that? I mean, what kind of a deal is Indonesia looking to secure with President Trump then?
Well, I think generally, you know, the ASEAN, I mean, I was just at the AEM, and there's a lot of momentum to continuously collaborate and work together. I think ASEAN as an entity, as a region, is a very important one, and we understand and have recognized that we take a very important role in the global economy. And we've had conversations with multiple countries, including that of the US, in terms of how the ASEAN region can better their trade. You know, coincidentally, Indonesia is leading the one between ASEAN, Canada, FTA, for example. And again, with the conversations that we have with the US, you know, we want to continuously collaborate. I think each ASEAN nation has their own negotiation process that they have set in place with America right now, and we're all in the same boat. But in terms of the trade deal, I think this is something to look forward to. You know, we just have to wait for 2 weeks, I think, to see what happens. But of course, in the case of Indonesia, we're always going to be open to collaborate and work together with the US.
And that was Indonesian Vice Minister of Trade Dyah, Roro, Esti, Widya, Putri, speaking to us here at Milton. Let's get fresh insights on the tariff risks with our next guest. Mary Ang is a former Canadian Minister of International Trade. Mary, good to have you with us.
Always good to be here with you, Haslinda.
We just heard from the Deputy Minister of Trade of Indonesia. She talked about how Indonesia is exploring new partnerships. Is it not just the Indonesians who are doing that? We have the rest of Southeast Asian nations doing the same, looking at Europe, looking at Africa. What opportunities do you see for a country like Canada?
I think there are tremendous opportunities for Canada, and I would say to Southeast Asia, and you've heard me say this before, come to Canada. I mean, you know, we're here at the Milken Institute. We're talking about capital. So much of the capital today is talking about where is it that they can actually find places for global diversification. I would say Canada is a great place, because the other thing we hear from so many of the capital investors here is they're looking for predictability. They're looking for countries that can, you know, that they could invest in. And right now, there are a lot of really terrific things to do with Canada. But speaking about Southeast Asia, last week, President Prabowo was in Canada. He and Prime Minister Carney signed the Canada-Indonesia Comprehensive Economic Partnership Agreement, so free trade deal with Canada and Indonesia. This is really excellent. I know a little something about that. As the former trade minister, I led those negotiations. So there's great opportunity there between Canada and Indonesia, of course, with this new deal, but also the region and broadly within CPTPP, because many of the countries who are Canada's trading partners within that agreement are also a part of this ASEAN. So you can see that this is a real great environment for Southeast Asia to think about North America. But I would say think of Canada in that North American equation.
You talked about CPTPP. Is this a good opportunity to expand it even further, include countries like China, so that everybody can band together and benefit from greater coordination in trade policies?
Well, I think that having been the chair of CPTPP a couple of years ago, the decisions for accession will ultimately be among all the partners, and therefore, does it make sense for all of the partners? One of the things that was really important to all of the CPTPP countries, all of the CPTPP partners, that they were very proud of, is that the agreement is a high standard agreement. High standards on the environment, high standards for workers, really good market access, and also looking at you as a trading partner. Are you a good, consistent trading partner that also respects the rule of law? I think that is what makes CPTPP so strong, because if you look at countries today, they're looking for predictability. They're looking for that market access. They're looking for dispute settlement mechanisms that they can rely on. That's what investors, that's what companies are looking for as well. And I think those private sector companies are going to say to their countries, let's make sure that we have access to these markets that are really good, but don't ensure that there is that stability, because that's what's actually that's what will work for us.
Many countries are negotiating with the U.S. with China in mind. We have the likes of Mexico making concessions, imposing tariffs on Chinese products as a way to get a better deal with the U.S. Do you see Canada going the same way, or forced to go the same way?
Well, I mean, the North American market is so integrated. I mean, we have had in Canada we call it CUSMA, in the United States we call it USMCA. But this is a trade agreement between our three countries, and in fact between Canada and the United States, that have been going on for decades. Our supply chains are incredibly integrated, and it has served our economies well. We have seen tremendous growth in our businesses and jobs for our workers. That type of integration will necessarily require us to think about the cost inputs that make up that trading relationship in sectors like auto, as an example. And we will always, I think, in Canada, think about both trade being fair, but also one that is also open and trusted as well.
Talk to us about where trade negotiations are from where you're seated. I know you don't have a front row seat, but you do understand the negotiations happening right now. We've heard from Mark Carney's point person saying it is not the dead end in terms of the tariff deal. They're still optimistic. The best case scenario, how would that look like?
Well, all three countries now have launched consultations about the review that is due to come up in 2026 of this agreement. It's a review, it's not a renegotiation, it's a review. That's what's actually in the agreement itself. I think there's an opportunity there to really look at what really works really well, and what is it that we should be looking at a little differently. I would also say that today Canada continues to enjoy tariff-free access through the USMCA because it's USMCA compliant. That bodes well for our industries. At the same time, we are seeing 50% tariffs on really important industries like steel and aluminum and forestry, softwood. So we are going to have to work with the United States those tariffs are just unacceptable, and we're going to need to work on those, and I know that the government is doing that. But today, you're seeing Prime Minister Carney also look at trading relationships with other trading partners that Canada benefits from really excellent relationships with, whether it's the United Kingdom or whether it's the European Union. Of course, last week it was Indonesia in Canada, but this region in particular as well. The Prime Minister, I believe, has plans to be here for APEC and ASEAN. And I think these are just opportunities for Canada to continue doing that work of diversification, while at the same time ensuring that we continue to participate in our very important relationship that is North America. But diversification is something that this government is very committed to, and you're seeing the Prime Minister do that work right now. Diversification
is great, but you also require a deal with the U.S. It was supposed to happen in August, and now there's a lack of clarity when that might be. What's the cost to Canadian trade, and what's the cost to the Canadian economy if we don't see a deal anytime soon?
Well, I know that the government is working hard on that. They're going to have to work very hard to bring some certainty to Canadians with the United States. But today, Canadians are seeing that just simply because, over 80% of our trade with the United States continue to enjoy USMCA tariff-free access. So that is good for Canada. So in terms of a general rate, Canada still is leading the pack that way. No question that the government is going to have to try to land something to create that certainty for Canadian businesses and workers. They expect it, and I know that the government is working hard on that, and that work just has to continue.
Could there be a regional response? You talked about how Prime Minister Carney will be headed to ASEAN in Malaysia in October, and he's looking to diversify. He's looking at negotiations with the countries in this part of the world. Could there be a response from these countries to counter what's happening with the U.S.?
Well, I think the very fact that we are, that the work that has happened now over years by Canada and its commitment to this region. And this work continued to deepen the commercial and the diplomatic relationships in this region just simply means that ambition for diversification, what we can do together, what we can do bilaterally, means that it puts Canada and indeed our trading partners in a better position, because that is essentially what diversification has to mean.
Globalization at risk, obviously. Can the WTO play a role? Is it playing a role right now?
I think the WTO should absolutely play a role. I was just there a few months ago. This is their 30th year. The question I asked was, if we didn't have a WTO, would the world create it today? And the answer is yes. You need a set of rules. You need a rule book to deal with just the practical things like export restrictions and how to provide transparency to that, how to make sure that the ease of goods and services are able to move across borders. Those are the things that are under the hood, but the WTO is actually working in that respect because that set of rules are there. Does it need modernization? Does it need rules to fit our purpose today? Think about AI. Think about the environmental climate transition. Those are very real in many, many markets across the world. And we either have a set of rules that we've all negotiated, that we can live by, but it does need work. And I would hope that everyone continues to stand up the rules-based system so that we have something that we as a world are able to work with.
The supply chain that's getting disrupted now on the back of Trump, is that permanent? Or do you see the supply chains getting back post-Trump in 3 or 4 years' time?
Well, I think what I'll do is reflect from what I'm hearing here at Milken. I mean, you're listening to a number of companies, a number of investors, and they've been throwing out terms like, well, you know what? Of course we do work with the United States, but now can we look at United States +1, United States +2 or 3, which really means that how do we look at those supply chains? Can we rely on what it was, or do we just simply modify, get creative, create backup and then another backup? And I think that that's actually here to stay.
Mary, thank you so much for your perspective. Great having you on the show as always.
Always.
Mary Ang, former Canadian Minister of International Trade, coming to you from the Milken Summit. Still to come, India's billionaires are making waves on the markets, and as regulators take a closer look, family offices could soon face new rules. We'll break down what's at stake. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. We're keeping an eye on Indian markets after Thursday's holiday and the RBI's hold on Wednesday. The Nifty and Sensex, of course, if you recall, on Wednesday, snapping an 8-day losing streak. Today, though, back in the red. The rupee in focus after the RBI unveiled fresh steps to enhance the international acceptance of the currency. Has been under tremendous pressure. Now, India's billionaires becoming a growing force on the country's stock exchanges, and now regulators are taking notice. The Securities and Exchange Board of India, or SEBI, is considering new rules to bring family offices under its oversight for the first time. For more on what's driving this push and what it could mean for markets, let's go to Bloomberg wealth reporter Advait Palepu in Mumbai. Advait, put this in perspective for us. Tell us what the markets regulator has been discussing and what are the concerns here.
Good morning, Haslinda. So over the last few months, the Indian Capital Markets Regulator, Securities and Exchange Board of India, has been discussing with multiple family offices how they make their investments, the kind of vehicles they use, and the extent of their activities in the Indian public markets and private markets. Now, most Indian family offices are structured through various mechanisms, whether it's a partnership, a trust, a private company, a shadow bank, or an alternative investment fund. What the regulator is now suggesting is that maybe there can be a specific alternative investment fund type structure for family offices looking to do both private equity and public market investments. What the family offices are saying that some of the rules concerning alternative funds, some of the rules concerning capital market investments may not apply to them because they only represent one family and they don't take money from a third-party investor. So I think what the regulator seems to be suggesting is, or seems to be discussing is, just to get a sense of the lay of the land, how family offices make investments, how entrenched they are, because this pool of capital from family offices has now come up to a serious level of money, both in private and public markets. So right now, I guess the SEBI is taking a dipstick test to see how family offices behave, how invested they are in the market, and what the future course of regulations could look like. Obviously, this will take a step-by-step process. It might start with a few amendments and a few tweaks to existing regulations, and eventually could end up with a larger policy for family offices. Yeah.
Of course, when we talk about the wealthy families in India, we're talking about the Adanis, the Ambanis. Give us some perspective. How large is the family office universe in India?
So, depends on which wealth manager you ask, which sort of policy expert you ask. But the often cited number is about 300 family offices. These are specifically entities used for investing in the private markets. But it depends on who you ask. Some people might say the number goes up to about 1,000 or maybe 2,000 to 3,000. Given that in smaller towns, a lot of businesses and a lot of families have investment companies, have real estate companies that are separate from their operating company. So the universe of family offices or the universe of private wealth could be about 3,000 companies, of which maybe 300 are actually structured as professional financial investment companies on behalf of business families.
Before we let you go, I'm just wondering what's been the response from the family offices?
I think a lot of them are concerned about the scale of regulations, that if there are going to be regulations that come in, what the compliance requirements would be, how transparent they would have to be. So there is some amount of dissent amongst these family offices against being regulated or having complete transparency, but I think the majority of them that are in conversation with the regulator are happy to disclose their information, provided that they are given some leeway in terms of how they can make their investments.
Advait, thank you so much for that. Bloomberg Wealth reporter Advait Palapu joining us from Mumbai. Now, before we go, here's a look at some of our guests. Next week, we speak exclusively with the group president of Indian conglomerate Larsen & Toubro, as well as the president of the Thai Stock Exchange. Plus, fresh market analysis from GQG Partners and St. James Place as traders weigh uncertainty over the U.S. government shutdown. That is it for Insight. Keep it here with us. This is Bloomberg.